it's just really counterintuitive. You know, when you see a stock going down, your first thought is not, I should buy this. It's usually, shit, you know, like, let me get out. But the thing is, you have to learn to, like, reprogram your brain. It's extremely counterintuitive, but this is the way. What is up, everybody? Thiz here, doing some webcam chat with the guys. I figured, you know what, we got the camera set up. Why not make a quick video? And today I wanted to talk to you about something that probably doesn't get talked about too much, but was extremely pivotal in my trading career. Right. So in the beginning of time, whenever you're first starting out and learning how to trade, you know, now that I'm where I'm at, looking back, it always, like, I always think about it, I'm like, well, I don't know why everybody teaches to trade this way, and that way being to buy breakouts. I don't think buying breakouts is necessarily wrong. I just think that it's not always the most effective way to enter a position or be looking to play a setup. And the thing about, you know, the setups that we play is we know it's a setup before it even breaks out. And we've seen these things many times before, and you'll notice that a lot of times we're buying on a dip. We're not looking to buy a breakout. We're looking to buy that dip. And so people might ask, you know, why do you buy dips? You know, why aren't you looking to buy the breakout? And thinking back on everything that a lot of big traders or big fruiters would be teaching people is the wedge breakouts, the flag breakouts, which, you know, we talk a lot about that particular setup. Talk about the flat top breakouts. And so as a new trader, I'm going through and I'm like, yeah, this is great. I'm trying to trade these setups, and I would find myself just getting absolutely wrecked a lot of the time. You start looking at a lot of these setups that people are trying to, like, tell you, hey, buy these breakouts. There's so many times where, you know, let's say you have a, you know, some kind of downtrend going on here, and maybe you went to buy the breakout here, you know, and then you would just get washed out. Or maybe you're looking to buy some kind of flat top breakout, you know, you're like, oh, flat top break, I'll buy right here, and you get washed out. When you're buying a stock away from a key level and away from support, you're essentially opening yourself up to more risk. There are some really nice downtrend breaks and stuff like that that do work out great. But what if I told you that you could learn to buy the dips for those breakouts, and it could allow you to have more flexibility in your position? It could allow you to have a lower risk in most case scenarios if done correctly. It could allow you to make more money. We're going to use this FTCH as example. Obviously the charts are always going to look a little bit different, but for the sake of, hey, this was pretty clean, you know, wedge, we'll go ahead and we'll use this as an example, and we're going to be speaking hypothetically, right? You know, there's a couple different places where people could have tried to go for a breakout buy. They could have, you know, went for this flag here looking for the downtrend break and got flushed out. You clearly could buy a breakout here, which, I mean, I guess depending on who you are, you could have even got stopped out here. Like, it technically broke downtrend, flushes completely below this candle, and, you know, according to how a lot of people teach how to trade, that would probably stop a lot of people out. But when you're buying this dip versus buying the breakout, you're much closer to your risk level right here, or the risk level just makes more sense in a lot of case scenarios. You know, like when you're buying, like, hey, people say, hey, buy this breakout, put the risk under the, you know, the candle you just buy, and it's just like, sometimes, man, that just doesn't make sense, especially in like a really volatile market. You know, you are actually right up against a key support or a key level of resistance, which means you have a clear risk. So you're not getting into a trade just like, well, I'm gonna buy for the culture, you know, like you have a clear risk, and so you can immediately, you know, take your position times whatever your risk is in this area. Let's say you bought in here, right, and trend line's a little bit below 12, right, so you're risking maybe 10 cents, and the breakout is a whole 20 cents from there. So you're already looking at 2R, right, if you're talking in terms of R. And then on the actual breakout itself, you know, your first target would be 1245, and, you know, you're looking at another 2R, so 4R there, right? You're up against this key support, so you know once you have a clear risk, it's a lot easier to accept your risk, and that is a big part in trading in itself. So if you're buying this breakout, more than likely, you know, you're just going to take one position, you know, just slap the size on and that's it, and you just fucking cross your fingers and hope that the play works, right? When you're dip buying, okay, let's say you buy right here on this dip, right? Let's say you put a little on, you know, there's a little room before, you know, for the trend tap. You don't always get the trend tap, you know, it's a smart idea to kind of start scaling some size in. But let's say you take a first ad here, right? When you're buying dips, anticipating the breakout, when the breakout does come, you can still be a breakout buyer now that you were a dip buyer. Why? Why does it make more sense now? Well, it makes more sense because you have shares right here down next to a support. So let's say that this thing breaks out and you go ahead, let's say you double down, right? You double down. So what does that do? That's gonna bring your average up to about right here. Okay, something like that. So now you have double the position for the breakout, and even if the breakout fails, well shoot dude, you still have all of this room to your average. It's almost impossible now that you're going to have a red trade. And you see me you see me talk about this a lot, where it's like, oh, free trade now, free trade, right? Because we buy a dip against a key level, we're going into a breakout, right? And I don't always add size on the breakout. It's just something that you can do, right? But once it gets away from that, let's say you do buy for the breakout, once it gets away, it's a free trade. All you have to do is keep moving your stop up, taking profits on extension. But even if this was to fail right here, if this was to fail right here, worst case scenario, you stop out, break even, and you lost nothing other than, you know, what you're up, but we weren't realized anyway. Better case scenario, you're like, okay, this is let's say it looked way uglier. There was a big red volume candle and this thing was clearly a failed breakout. Well, then you could take it off before your average and have a little green trade. You know, better than nothing. You know, a little something is better than a little bit of nothing. And it's definitely better than buying a breakout and then getting stopped out and accruing a bunch of small losses. You see what I'm saying? And so with this strategy, like I said, buying dips can lead to more profits. If you were to buy here on this breakout, we don't know that that move is coming, right? Majority of people are going to be targeting this, right? You know, they're going to be looking at this level, so you're probably targeting like a 20-cent move or something like that. When you buy the dip inside of your pattern, you're already looking for a 20-cent move, and then you get another 20-cent move on top of it. And you're opened up to the flexibility to double down your position, right? While having still a really nice risk, right? Moving your average up a little bit, but being able to stop out, break even, etc. So now you're doubled down, and you already got 20 cents, and then if you get the next 20 cents, you just got that other 20 cents on double the position. You do the math. And now, hey, sometimes this can lead to a lot of break-even trades. Sometimes, you know, this can lead to small wins or leaving some on the table. You know, let's say you bought the dip, it came up to the breakout area, and you didn't scale any on the breakout area, because that's another thing that you can do. You can take profits into the breakout area just to make sure you lock some in and then hold the rest that you're comfortable with for the breakout, right? But here's the thing, is we aren't buying this to scale into the upper trend line and add to add to the resistance. We're looking for the breakout. We're anticipating the breakout and getting a way better average, a way lower risk, way bigger, you know, margin to make monies. And in a lot of case scenarios, as you can see, like, it just makes more sense. And the problem is that a lot of people just don't know how to buy the right dips. Or, you know, when you see a stock going down, your first thought is not, I should buy this. It's usually, shit, you know, like, let me get out. But the thing is, you have to learn to, like, reprogram your brain. It's extremely counterintuitive, but this is the way. I mean, you can still buy breakouts. I buy breakouts, but what I do is, if I buy the breakout, let's say I missed the dip, I'm buying the breakout way smaller size, and I'm looking to scalp it. Because especially in this market, I know that we can get washed out real quick. And for me, it's like, I don't really have any interest in getting washed out buying a breakout when I know that I probably shouldn't be buying the breakouts, because over my experience, like in my time trading across the spectrum of all the statistics, etc., like, dip buys have been the king for me. That, you know, trying to buy a breakout with size has always been what's led me to some of my biggest losses. With that being said, that's not the case for everybody. Sometimes the biggest losses for people are because they're adding all the way down. We're not doing that, okay? Even if we're scaling into a position down here against this trend line, our risk is a little bit below that trend line, you know? You can't expect things to just tap right to the penny, you know? You got to give it a little bit of room. You know, let's say we come down to $12 and there's a massive bid at $12. If that bid starts getting chipped, I mean, you don't have to wait for it to break down and all the hot dogs hit you in the face. Like, and with that being said, a lot of people are going to be asking, man, Thiz, that's great, But how the hell do I know what dips to buy? Well, I'm sure you guys have noticed a reoccurring trend in a lot of the plays that we are posting, and you're seeing these plays retest key levels, right? We like dips against key levels. Why do we like dips against key levels? We can have a clear form of risk against a real level, you know? Like, you can make up a risk at the end of the day. You can buy a stock and say you're risking whatever the hell you want. But at the end of the day, if you are risking against a key level, a level that is being respected, a level that is holding, or if you're short, you know, if you're shorting a level that's staying heavy, you're going to have more than likely, I'm not a financial advisor, it's likely that you're going to have a higher success rate. It's likely that you're going to get stopped out of less trades. It's likely that you're going to make more money. Obviously, we do also buy dips in trend, and sometimes you might not always have a key level to go up against. And for me, in my head, I try and keep it at like a 40% pullback of the leg it just made, right? And so what that usually looks like actually is something like this right here. You know, like if you look on the 5-minute here, right here we got this nice leg, and you get this pullback, and usually those pullbacks come down to, you know, the 8 EMA or the 20 EMA, and that's why I keep them on my chart, right? Is not necessarily every time it buys the EMA I'm gonna buy shares. Like, it's not necessarily that so much as it helps me quickly process information on whether or not a trend is healthy or unhealthy, right? Same thing with you know, the little volume average down here. It's a way for me to quickly look and subconsciously see, like, are we above average volume, below average volume? And, you know, using volume and using these key levels is how you're going to find the right dips to buy. It comes in, it's holding. Look at the volume. Guys, look at the volume. There's no volume coming into this level, right? And now we're coming down after we just had a really strong trend up. And what is it also? It's like 30 to 40% pullback of the move it just had. We like that. That's what we want to see. And then low volume. You have a clear risk. 884s, 880s, all right? You have VWAP below you. Literally, you could have got a position here, guys, and you could have risked 5 cents, right? Whatever it may be. And look at how, like, even this just leg right here, even half the leg, you're looking at 70 cents. You know, let's say you're super suave and you come all the way up here, you get $1 move. So you just risked 5 cents to make $1. Do the math, bro. I'm telling you, it just makes sense. But remember, guys, the bottom line is, if you're buying a stock away from a key level, if there's no real form of risk, if you're just like, well, I choose this candle, I feel I had a harder time. You know, you're gonna have to get good at knowing what a move could do and kind of predicting that. But it's easier to, it's kind of like if you were the weatherman. You know, weatherman can't go 3 months out and be like, oh yeah, we're fucked. It's easier to predict in a shorter time frame. And we're trading on a pretty short time frame, guys. So, like, it doesn't take long of seeing all this for you to start picking it up and being like, okay, you know, this is what I'm looking for. Holy crap, this dip held. Or, oh, look at this low volume pullback. It will start clicking. There are going to be markets that come around, and they are going to reward chasers. And then you're going to have a lot of people chasing breakouts. And then they're going to flip the script, and all those people are going to end up getting hurt. And you know what? If you can learn how to buy the right dips, even if the play doesn't work out, small paper cut loss, you know what I mean? And at least you know that the risk reward was there, you know what I mean? Dips are king, remember that. So just a quick video with some open thoughts, guys. You know, it's the weekend. I'm gonna go chat with the boys. I hope you guys enjoy your weekend. I hope this maybe, you know, maybe, who knows, dude, maybe this makes something click in somebody's head and it really helps them out. And if that's the case, then great. And if not, then it was just good to talk to you guys. I hope you guys have a good weekend, and I'll see you next week. Peace.